Good afternoon, kia ora, and welcome to the first webinar series 2021 by Pacific Trade Invest New Zealand. I see we have quite a number of people registered this afternoon, and that's always a good sign when you have a good cohort of listeners, and we certainly hope that the webinar this afternoon is very informative to you, and you are able to take away some quality information from the series. From our perspective at Pacific Trade Invest, our role is to promote investment opportunities that exist in the Pacific Island countries to interested parties in New Zealand and to the rest of the world. Investment, as we all know, is a complex issue. Our role really is to facilitate those opportunities between the parties in New Zealand internationally and those in the Pacific Island countries. This is an area of work that we at Pacific Trade Invest New Zealand have been doing for the last 2 or so decades, 3 decades, and I guess it gives us some level of authority to speak on the matter. Over the last decade, we have facilitated and serviced quite a number of foreign investment opportunities from New Zealand into the Pacific Island countries to the value of just over $500 million over the last decade or so. But there is much more that we can do as a regional organization servicing all 16 Forum Island countries. And we need your help to get your investment portfolios to a standard that we can use to bring foreign investors to the party. Being exposed to investment policy, the regulatory environment, and the facilitation domains gives us a certain richness of understanding, I guess, of all its complexities. Yet the offerings which continue to be designed and offered by interested parties, be they development partners, international agencies, fund managers, donors, technical institutions, etc., illustrates the richness of our region and the investment opportunities that exist within it. The agricultural sector in the Pacific has its comparative advantages, both from a geographical and sectorial perspective, added to which its sectorial specialization in value add, for instance, increases its export performance exponentially due to high global demand. Performance indicators in the agricultural sector, including technological capacities, human knowledge and know-how, product quality and other indicators, is a good benchmark, I reckon, to work with across the agricultural value chains from which to prepare an adequate action plan for enhancing competitive positioning in line with international best practices. Having said that, we all know too well that doing business in the Pacific is hard. It's particularly difficult for foreign investors to navigate their way through massive amount of information about the requirements, the regulations, the registration, fees, investment certifications, etc. This investment webinar is designed to bring the voices of investment managers and those in the know-how on the do's and don'ts of attracting private investment, what investors look for, and the types of investors out there. All these and more is what makes this webinar series different, because you get to hear from specialists in this field. With those few words, I thank you all very much for your interest. I hope you will stay with us for the duration of the webinar this afternoon and tomorrow, and I sincerely hope you find it informative. Thank you.
Thank you, Glenys. Thank you very much for those words, and thank you everyone that has joined us today for this webinar. Good morning, good afternoon, or good evening, depending on what part of the world you're in right now. And just wanted to say a special hello and I hope everyone's doing well over in Fiji right now, given the pandemic and the virus, unfortunately, is keeping everyone locked in at home. So I hope everyone over there is well, and our best wishes and prayers are with you. My name's Graham Saunders. I'm an investment consultant here at Pacific Trade and Invest New Zealand. My background, I guess, comes from 12 years. I've been involved in investment and strategy for a large global Japanese investment and trading company involved in infrastructure, innovation, joint ventures, mergers and acquisitions, but I have to be quite honest and upfront, not in agriculture. So we have experts that we have to talk about this in George Kuru and Tony Wood. I have to send apologies on behalf of Mark Murray, who unfortunately is ill and unable to join us, but his material will be in this, and Tony and George will be covering it off. So wishing Mark a speedy recovery, and we'll certainly look forward to hearing what George and Tony have to say in today's and tomorrow's webinar. So I think Glenys has covered off a lot of the very important reasons, you know, the realities on the ground about agriculture. This webinar is about giving people tools, understanding through practical experiences and procedures and processes of what these funds, these international funds, look like and what they're after. And they're out there. And a lot of them do have a mandate for the islands, but to get these funds' attention, you need to have a project pipeline. It's absolutely essential. And this goes across any sector, not just agriculture. So what we're going to be talking about is how to, I guess, assess and ascertain and identify whether you're able to be one of these potential projects for the pipeline, and giving you the know-how to assess that yourselves. But of course, we do have some experts here who can help guide and do that as well. We need to change the narrative in the Pacific. We need to work collaboratively, not just farmers, but communities, companies, governments. We all need to work together to put together a project pipeline that we can get the funds excited with, engaged with, and with that, make the Pacific a very friendly, welcome venue for these international agricultural funds to come and invest into. And this will ensure the best optimization of production, processing, logistics by collaboration and cooperation. And that's, I think, essential to take agriculture to the next level for the Pacific. Now, during today's session, we encourage questions. We don't have the ability to do verbal, but certainly type your questions in. And every opportunity that we can, we'll endeavour to ask all the questions that are presented to us. But those questions that aren't answered today, we will be following up with every question that's put forward, and we'll email out all the answers to those questions after the webinar to ensure that everyone gets the answers that they require who are attending this particular webinar. So enough from me. I'll hand over to the people that you really want to hear, and that's George Kuru from Ata Maria in Jakarta. George, I'll hand it over to you.
Yeah, thank you, Glenys and Graham from Pacific Trade Invest for the opportunity to participate in this webinar. And I'd like to send out my greetings to the participants who I understand are coming from throughout the Pacific. So I'd like to say tēnā koutou, pulavanaka, talofa lava, malo e tau lava, whakalofa atu, kia ora ana, welcome and bonjour. General greetings to everyone involved in the webinar today. Before we go too much further, I'd like to just give a short presentation on myself and my associate Tony Wood and my company. So I will just share this document. Is it coming up on screen, Ken? It's great. And give a short presentation on ourselves and our group. All the senior management in our company are originally from New Zealand, and we worked all over the world and established this firm here in Jakarta to service the agriculture and forestry sectors in Asia, the Pacific, and Africa. And we've been in business now since 2006 or 2007. And our clients are mainly in the forestry and agricultural sector, based throughout the world. 43 countries and 6 continents. That's a picture of myself. I'm George Kuru. My background is that I trained as a professional forester and a biometrician, which is sort of like a growth modeler, that sort of thing, with interests in modeling and IT development and valuation and resource assessment. I'd like to introduce Tony Wood, who really is an operational expert in all types of forestry and agriculture. So I just get Tony to introduce himself.
Okay, good afternoon, everyone. Sorry, can you see me or not? We're just getting this technically sorted. As George says, I'm originally from New Zealand. I've been based up here in Asia for almost 30 years now. My background is mostly in the forest industry, pulp and paper, but in 2008 I joined the PTI Consulting Group, which is one of the largest international groups in the world, more than 7,000 consultants, as their Indonesia manager, and we worked on a range of forestry and agricultural projects during that time. Now, this involved the full due diligence, feasibility studies, valuations, and connecting international investors into real projects that got going on the ground. And since then, I've moved over to Ata Maree, working with George and the other person you can see on the screen, Alex Thorpe, and we're continuing that same theme for bringing investment, both from internationally and domestically, into real projects.
There's a third presenter who, Mark Murray, and unfortunately Mark is fallen ill, sort of seriously ill, and can't be with us today. I'm sort of hoping that maybe he can recover. But in any case, we'll battle on without him. And Mark's background is in finance and investment, and he works very closely with us in projects related to foreign direct investment. Now, we do mainly work in the Pacific and Southeast Asia and Sub-Saharan Africa. Hang on. But we've pretty much worked around the world on different projects. But I've had significant experience in the Pacific, having worked in Fiji with Fiji pine and Fiji hardwood, in Tonga with the Tongan forestry project on Iowa, the Philippines, and Papua New Guinea, and Solomon Islands. So I am familiar with the requirements and the challenges of working in these countries. So we have a broad range of clients from international donor organisations through to forestry and agribusiness clients. We're very big in the palm oil sector here in Asia, Southeast Asia, and in Africa as well. And the areas where we're working in is forestry and agricultural resource assessments, forestry and agriculture asset investment services, management services for technical auditing and project management, sustainability services, climate change, IT systems. So I think that's enough about our company. But if you need more information, please contact us. So I think I'd like to go on to our first presentation. Let me open it first. File open. Can you see that, Tony? Is it? Okay.
Close that one first. You've got to stop here and then
okay. Just one moment, I'll share the presentation. wrong document. Okay, a new share. This is the global trends in agriculture funding. Got it? Okay. So the first topic in this webinar is deals with global trends in funding agriculture. And it's just a general presentation on what's happening in agricultural investment funding at an international, national and private sector level. As background, agriculture is a key part of life in the Pacific Islands, with many communities relying on it for subsistence as well as cash income. And just like many parts of the world, COVID has wreaked devastation on many sectors, including the tourism sector, which has been very traumatic for many economies. So here in Indonesia, we have an island called Bali, which is heavily dependent on tourism, and that economy has basically collapsed. And I imagine that a similar situation has arisen in many islands in the Pacific. So there's a renewed interest in perhaps spreading the economic burden to other parts of the economy, including building up agriculture. So increasing the performance of agriculture is going to require increased inputs and expenditure, which in turn is going to require increased financing and investment. So in order to introduce this topic, we're going to discuss how we can attract investment to the Pacific based on some understanding of the global investment trends into agriculture. So when you have a look at the global, the basic drivers that are affecting foreign direct investment, the standard factors include, the status and competitive of costs and wages, tax issues, the availability of good transport and infrastructure, the availability of a significant local market, access to free trade areas and other government support mechanisms, and the situation with any specific commodity in terms of its growth in the market, and the ability to develop those commodities and the location specifically. So when we're looking at investments, traditionally we're really looking at return on investment and financial risk. But it probably in the last 10 years has been another driver in terms of investment, and that's been sustainability and the importance of being able to meet sustainability criteria as part of the investment. So when we're talking about sustainability, we're really talking about three issues. The first is environmental performance in terms of its impact on climate change, biodiversity, water efficiency, energy, carbon, and environmental management. The second involves the impact of projects on the social sphere. So that's, creating equal opportunities for all members of society, creating opportunities for local communities, providing health, ensuring that health and safety is protected, along with human rights and other issues like that. And then thirdly is the implementation of strong governance systems over organisations to ensure that they're applying proper business ethics, they're complying with their commitments in environmental and social terms and in business terms, and that they're running the company in a professional manner. So this sustainability agenda has been around for quite a while. So it sort of first aired itself in 1992 at the Earth Summit in Rio de Janeiro, which was followed up with the UN Conference on Sustainable Development in 2012, the development with the creation of Millennial Development Goals, and a whole list of other things. Key to them was the Agenda for Sustainable Development, the Sustainable Development Goals, climate change, the Paris Agreement on climate change, and specifically for the Pacific, there was the creation of the Small Island Development States Initiative, SIDS. So if we're talking about emerging trends, there is a policy consensus at the international and national level towards equitable and environmentally sustainable development. And there's a movement in the international finance sector towards pursuing sustainable business development and ethical investments, which is supported by the development of sustainable investment criteria and management standards and practices to support good investment project design, operational management, monitoring, verification, and reporting. So, you know, we still have the requirement to get good return on investment and reduce financial risk. But there's a third arm now that's really looking at social and environmental performance as part of investment in business. Oops. So at an international level, really the big driver of this agenda was the 2030 Agenda for Sustainable Development, which was adopted by the UN members. And this provides a blueprint for peace and prosperity for people on the planet now and into the future. And at the heart of this agenda are the 17 Sustainable Development Goals, which is sort of like a call for action by all companies developed and developing in a global partnership arrangement. And it's really focused on ending poverty, improving the status of low-income countries, and strategies that improve health, education, reduce inequality, and spur economic growth, while at the same time tackling climate change and working to preserve our oceans and forests. So there they are. They're the 17 sustainable development goals. I'm not necessarily going to go into those in any detail, but this document really forms a platform from which governments now are developing their own domestic policy frameworks. So I think the point I want to make is at a national level, governments worldwide are creating investment policies, laws, regulations based on these sustainable development goals. And it impacts on rural investment policy and covers issues like the legal and regulatory framework around land and business ownership, domestic and foreign investment, employment law, health and safety, land management practices, taxes, and duties. And it's continuing to have an impact on countries who are regulating based on environmental sustainability perspectives, including carbon emissions targets, energy, waste, and resource use, as well as setting mandatory environmental standards for incorporating sustainability into government procurement. Now, in addition to that sort of environmental thing, there's still the opportunity and an ongoing program of countries trying to improve the investment environment at a national level. And in agriculture, that focuses around standardising, clarifying land law and land titles, enabling land use and clarifying land ownership and land access rights. Of particular importance is removing unnecessarily regulation around land use and employment, and and land use preferences, and providing supportive laws and regulations around taxation and repatriation of funds to offshore investors. I don't want to focus this webinar on domestic laws and regulations, as I think each country is different and has different challenges. But I know that there has been increasing focus in the Pacific on trying to improve the investment environment in agriculture and forestry. Where I think there's been a lot of movement, probably the biggest movement is in the private sector investment. So there's always been bank finance options for agriculture and forestry businesses. And in practice, this avenue hasn't usually been available to smallholders and farmers and foresters in developing countries, unfortunately. Here in Indonesia, probably one of the most significant sources of investment finance comes from annual offtake agreements. That's where farmers source finance based on agreements to sell a crop according to agreed price and quantities. It's very common here in Asia, especially between farmers and fertiliser suppliers. We also have in Asia microfinance programs designed to support poor and impoverished communities, and it's become very prominent, both here in Asia and in Africa. I don't know the situation of microfinance programs in the Pacific, though. And probably the area that we work in mostly is equity investment funds who invest in a business, usually taking a share of the business enterprise according to agreed terms and conditions. There has been really considerable growth in this market, especially in the area of green funds. By green funds, I mean these are funds that have specific environmental and social criteria and requirements in addition to return on investment requirements. What we find is that virtually all private sector investment in agriculture has an environmental and social component to it. And the base document for this is what's called the IFC Performance Standards. We can discuss that later. Here, actually. So in addition to standard return on investment requirements, international investment funds now usually require compliance of the investment project with the IFC Performance Standards. And these are environmental and social performance standards that define business responsibilities for managing their environmental and social risks. And generally, well, there are eight specific requirements around risk management, labour, resource efficiency, community, land resettlement, biodiversity, Indigenous people, and cultural heritage. I think it's worthwhile just having a very brief overview of each of those requirements because, you know, it is the basis now of the environmental and social performance requirements of financing agriculture. Most requirements anyway. So the first performance standard is the assessment and management of environmental and social risks and impacts. So the standard supports the management of environmental and social performance throughout the life of a project. And the standard requires the establishment of effective environmental and social management systems, ESMS, they usually referred to, that is initiated and supported by management and enables engagement between the company, its workers, local communities and other stakeholders. And the purpose of the ESMS is to identify and evaluate environmental and social risks and impacts of the project, to adopt mitigation strategies to mitigate social and environmental impacts on workers, communities and the environment, to promote improved environmental and social performance, to manage grievances of affected communities and other stakeholders, and to promote and provide engagement with communities throughout the project lifecycle. The second performance standard relates to labour and working conditions. And this says that the pursuit of economic growth should, through employment creation and income generation, should be accompanied by protections of the fundamental rights of workers. So the condition says that workers need to be treated fairly, with non-discrimination and equal opportunity. The business needs to establish, maintain and improve worker management relationships, promote compliance with national employment and labour laws, protect workers, especially vulnerable categories of workers such as tourists, such as children, migrant workers and subcontractors, and workers throughout the supply chain, and to promote safe and healthy working conditions and avoid the use of forced labour. Performance Standard 3 is about resource efficiency and pollution prevention. So it recognises that every significant business creates economic activity, and those organisations should manage and mitigate wherever possible the levels of pollution to air, water and land, and consume resources in a manner that does not threaten people and the environment. So it's really about avoiding and minimising adverse effects on human health and the environment, promoting sustainable use of resources, and reducing project-related greenhouse gas emissions. If you bear with me, there's only 5 left. So Performance Standard 4 is about community health, safety and security. And it requires organisations to avoid or minimise risks and impacts to community health, safety and security. And the key objectives are to anticipate and avoid those adverse impacts on health and safety in the affected communities, and to ensure that personnel and property is safeguarded in accordance with relevant human rights principles in a manner that avoids and minimises risk to communities. Performance Standard 5 is about land acquisition and involuntary resettlement. And this is a really serious issue here in Asia and in Africa. And this really requires that project-related land acquisition and restrictions on land use do not have adverse impacts on communities and other people who use the land. And it refers to not only physical displacement of people from the land, but also economic displacement. So, it's firstly about looking at options that minimise or avoid involuntary displacement. It avoids forced eviction of people from the land. It's about avoiding or minimising adverse social and economic impacts from land acquisition, and improving the livelihoods and standards of people, of these displaced people, and providing appropriate alternative living conditions for those displaced people. Number 6, which is quite important, is about biodiversity conservation and sustainable management. So generally, this standard is about protecting and conserving biodiversity and maintaining benefits from ecosystem services, and promoting sustainable management of living natural resources. And you'll see later on when we talk about project due diligence, this is a significant part of that. Performance Standard 7 deals with Indigenous people and Indigenous rights. and requires that organisations recognise Indigenous people, defend their rights and interests in lands and natural resources and cultural resources. So it requires that organisations recognise and foster full respect of the Indigenous communities. It anticipates and avoids or minimises adverse effects of projects on these communities of Indigenous peoples. It promotes sustainable development of these people as part of the project wherever possible. And there's a particular methodology around dealing with Indigenous people that's based on informed consultation and participation, and requires that any project where there's impact on communities and especially Indigenous people is made an offer of free, prior, informed consent of those communities. And lastly is cultural heritage, which is about protecting areas of high cultural value that exist within the project and the project activities. Now, I know we've been through that. It's a rather exhaustive list, but the reality is that if you're looking to get direct foreign investment in particular, from targeted investment agricultural funds, you'll now find that all these requirements are included as part of the terms of that finance. So it's important that when you're going forward, you understand what the requirements are, and that you're prepared for those requirements, and that you have the information to establish compliance with those requirements. So in summary, the traditional drivers of investment, which might be return on investment and minimising investment risk, or financial risk, have remained fairly constant and still pretty much the same. However, investment institutions now are requiring additionally that businesses comply with environmental and social requirements. So at like an international and national level, these environmental and social requirements have been developed in association with the UN Sustainable Development Goals as the framework document. And donor and private sector investment institutions now require conformance of the investment projects with the IFC Performance Standards. I mean, it's important to note that compliance with these protocols is a prerequisite for obtaining most investment finance, but it's also an opportunity. If you have a well-designed business proposal that incorporates these requirements as a way of fast-tracking access to investment finance. So that's the end of this presentation. Hello, Graham. Yeah.
That's great. Look, and just once again encourage everyone to ask any questions they might have of George. And I guess we do have one question that we can use. And I've got a couple more, but I'm guessing we could probably move on to the next session without a break, unless we get some more questions. But let me ask the one that we do have here. And if you are going to be covering it later, that's fine. But a question from Lisa Paisley about are there any specific areas of interest for these funds, or is it quite broad? Is it not really too crop specific?
No, actually, there's been a real growth in the type and number and scope of investment funds, especially in the agricultural sector, right? So I think in the next presentation, I've just brought up some examples of these sort of investment funds that are operating at the moment. And these are just ones that we've come up across as part of our own sort of business support to our clients. And I can discuss the sort of nature of those investments. It's in the next presentation, actually, session 2.
Sure, okay, no problems. Well, given we don't seem to have any other questions at this point, and I know that look, I do have some questions as well, but look, why don't we go on to the next session? How's that sound, given you've been so efficient and do the 3 things quite.
I have been going through fairly quickly. This is actually, I do want to disclose, this is the first webinar I've actually presented in. So it's a relatively new thing to me. And have you been involved in a webinar, Tony?
No.
Okay, this is our first. This is our first webinar, really. And I'm not sure if we'll run over time or we'll finish early. But,
We've spoken at conferences.
yeah, we've spoken at a lot of conferences, but never webinars.
You're doing a great job, George. So please keep it up. Let's move on to the next session, please.
Yeah, so the previous topic was, I think, a little bit dry, but I think this would stoke more interest in people who got more real-world application. So this session is about increasing agricultural investment in the Pacific. So I make this general statement here, and people might contest it or they might agree with it. But in our experience, we're seeing a proliferation of investment institutions internationally offering investment finance for agricultural development in developing countries. There's quite, it's a really growing area. My observation is that these funds are focused in Asia, Southeast Asia, Sub-Saharan Africa, and South America. That's for developing countries. And I think it'd be fair to say that the Pacific region is not receiving its fair share of this investment funding for agricultural projects. But people might want to correct me, but my feeling is that we haven't seen very many active funds that are targeting the Pacific. But by not very many, I mean none. So I suppose the question is, how can these investment funds be made aware of the agricultural investment opportunities in the Pacific? And how can they be encouraged to focus on the Pacific region? And from the opposite perspective, how can the Pacific better create a pipeline of investable projects in which international funds can be, towards which international funds can be directed? So that I think is really a significant issue. So I mean, there's all types of investment funds, and I'm not particularly an investment fund expert, but just in our day-to-day work, we come across all sorts of agencies, like the international agencies, including the World Bank, the IFC, ADB, etc. We have conventional bank finance organisations servicing the agriculture sector. We have agriculture investment funds, sort of referred to as AIFs. We have timber investment management organisations, TIMOs, of which there's quite a few. Some who are quite active in the Pacific region and in the Asia region, Southeast Asia. And then there's this development of specialist ethical investment funds, who are working in the agriculture and forestry space. So that's interesting. There's a wide diversity of organisations, but what we're seeing is that virtually all these funds have similar environmental and ethical requirements. They require compliance with the IFC Performance Standards. as well as their own specialist requirements. So what I've tried to do is sort of compile, it's a relatively random list of commercial organisation of finance organisations that we've come across in our own day-to-day work, but there are several others that you can find if you look. So Rabobank is a sort of standard financial institution that is specialised in the agricultural sector. They have a service that deals with agricultural investment in the developing world. They're generally looking at larger projects. I imagine that Rabobank has a presence in countries like Fiji and Papua New Guinea, possibly not other places. And another bank that's crossed our table is the Dutch Entrepreneurial Development Bank, which is involved in not only agriculture, but sort of downstream food systems in developing countries. And you'll see that they focus entirely on sub-Saharan Africa, Southeast Asia, and Latin America, with the Pacific being a notably absent. But there's no reason why they couldn't be persuaded to consider the Pacific. Here's another example. This is quite an interesting fund in that it provides funding to de-risk and facilitate eligible investments, which it then submits to its partner banks. And so they're looking at early investment and investment through what they call financial instruments, specialist financial instruments that reduce the risk of the investment and in many cases increase the liquidity of the investment through things like subordinated loans. Now, I won't go into each of these sort of investment instruments because I only have a really passing knowledge of what they do, but all of these are involved in working with early stage investments and then sort of enabling them to connect with the main project investors. Again, these guys are working in Eastern Asia and Indonesia, South America. Yeah, so these are examples of fund managers. IDH is a very interesting organisation, and we do a lot of work with them. Their regional office is based here in Jakarta, and the regional office also extends, its mandate also extends to the Pacific Islands. And they've been very successful in trade facilitation and capacity building in the agricultural sector and forestry, as well as creating investment vehicles to support specialised vertical industries. Now, we know these people very well, and one of their roles is actually to promote trade initiatives in the Pacific, but it's been several years now, and really they haven't created that capability. I do know that they have some operations in Papua New Guinea, but nowhere else in the Pacific. And my feeling is that generally they're not so interested in the Pacific because they can't see the opportunities arising there, which is a shame. Moreover, is a very interesting organisation, and it works with IDH, and it's dedicated to accumulating investment finance and then investing in agriculture in developing countries, non-specific. And there, the list goes on really. I don't want to spend too much time on these, and a much more comprehensive list could be prepared. So if we have a look at investment in agriculture and forestry in the Pacific, the general conclusion is that there is a low level of foreign direct investment in agriculture in the Pacific, generally speaking. And there could be a number of reasons for that. I've just noted four really. The first is that it's possible that in some jurisdictions there's an unattractive business environment. It could be that there's a lack of really financially attractive investments. I know that one of the big issues in the Pacific is the lack of investment at scale, so that there are a lot of very small agricultural enterprises which don't qualify or are too small to justify going through a detailed investment process. And the other issue here is really the lack of investment proposal pipeline, meaning that there probably are a lot of good agricultural investment projects in the Pacific, but they haven't been sort of adequately presented in a international standard investment document. I think I've had this one up before. These are about the factors that affect foreign direct investment. But possibly one of the most important things is the lack of a pipeline of investable agricultural opportunities that we can direct that foreign investment towards. So if we have a look at the business environment, I'd say that we really can classify these into three types of businesses. One are smallholder enterprises growing commodities and staples for the domestic market, which is sort of low-tech operations, usually low investment requirements, without access really to bank finance, so it's funded personally. And with wholly for a domestic market. Now, I think there's a growing presence of sort of smaller enterprises growing niche products. You could consider something like vanilla as one of these type of products, which is sort of probably more technically advanced, but on a small scale, producing a high value product, mainly for the international market, really requiring a medium investment requirements, but really lacking the ability to source funds for that. So they're mainly financed through personal finance. And the last category are these large corporate agribusiness industrial forestry enterprises with high investment requirements, often initiated through government supported programs and then funded by corporate investors, quite often in association with downstream processing investments. We sort of highlight here the opportunities to transition groups of smallholders into larger enterprises through collaboration of the production, processing, and sales processes. So what strategies can we look at to attract investment to agriculture in the Pacific? I think one of the avenues is to improve the engagement between regional and national institutions with these new investment organisations, showcasing the region, its strengths and investment opportunities, encouraging some of these international funds to establish Pacific region type funds that target agricultural activities in the Pacific, and perhaps better aligning the government policy for agricultural investment and a direct foreign investment to encourage these investors to come to the Pacific. I think there's substantial opportunity to improve the performance of agricultural organisations through the implementation of appropriate technology and improved management and governance, making those organisations more attractive investment targets. Assisting agricultural industry participants to collaborate and integrate to obtain economies of scale and improve the marketing and supply chain integration to develop domestic and international markets. And lastly, it's about improving the quality of investment portfolios and documentation to de-risk investments and better align those project proposals with investor requirements. So if one of the growth areas of investment are green funds, then we need to understand what the requirements of green funds are and align our business proposals along those requirements. So this section here is really about improving business proposals. So in order to attract investment, businesses need to prepare business documents to an international standard. And these include things like business plans, providing supporting technical documentation in an appropriate form, implementing independent due diligence and feasibility assessments reports that can be used as bankable reports, and then assisting organisations through the investment negotiation process, which includes things like pitch documents, preparation of term sheets, shareholder agreements, and company constitutional documents. So I want to just quickly cover that sort of thing.
I want to suggest before we dig into this, I think this is a really important part of the discussion, and I guess a part of ongoing work within the Pacific to make sure that these documents are up to scratch for these investors. Maybe we'll just take a quick break to take some questions before we get into this area, if that's okay with you.
Okay. No problem.
Okay, so we have some questions. Thank you for those that have put your questions forward. Now, I've got a question here that I'm not too sure I fully understand, but let's see if we can figure it out.
Yep.
Will there be any agricultural investments for Fiji as creating individuals to be entrepreneurs for those landowners? Here in Fiji, there are opportunities for landowners to invest in their own land and invest in agricultural and increase export. George, you got any thoughts around that?
Yeah, I think Fiji is basically the biggest nation in the Pacific. It is uniquely situated to grow its agricultural sector because they do have the land base to create substantial agricultural investments. But I think even in Fiji, individual landholders and matangali, their land holdings are not sufficient in themselves to operate, say, an export business, right? So, there's the opportunity to look at collaborative type things. Cooperatives are a really interesting mechanism, and they're very big here in Asia, especially in Indonesia, where groups of smallholders will get together and aggregate into 2,000, 3,000, 4,000 hectares, which is really substantial enough to attract investment and also to develop a standalone business in its own right.
And just a question here, just relating directly to that, is how can we collaborate and integrate to obtain these economies of scale? So in Indonesia or other parts of the world that have been operating, how have the individual landowners or the communities, how have they got together to get the scale, get the level of business that the investment funds were interested into? Are there different ways that that's happened from your experience?
Yeah, Tony might have a bit more knowledge of cooperatives, but there's a legal framework for creation of cooperatives. There's a legal framework for cooperatives in New Zealand, for example, and in Indonesia there's specific legal mechanisms to create cooperatives, and there are performance requirements, and that require the organisations to be run in a professional manner. It protects the rights of the individual participants in the cooperative. So in any Pacific nation, if you do want to go towards a cooperative model, you first of all need to have the regulatory framework in place. Then secondly, yeah, you just have to go ahead then and create the cooperative itself and manage the membership.
And under a professional body, you can't give the money directly to the farmers.
That's right, yeah. So here in Indonesia, the cooperative itself manages the business, and the cooperative members receive distributions according to their contributions. But there's no direct involvement between the smallholder as a producer and the purchaser of the products and services. So that's, but that really allows them to have economies of scale and to simplify the logistics and delivery of products from often hundreds of suppliers to multiple clients.
Just got a message here saying that within Fiji, the MCTTT has been established to create cooperatives.
Yep.
And I've just got so I guess one of the answers is talk to your local governments to see whether there are any bodies that are actually doing this, and if they're not, pressure your governments, and apologies to anyone in government here, but pressure your government officials to put something in place to make this a reality. And we have a message here. We used to have cooperatives in the Solomon Islands, but
Yeah.
they've died out. So no one of the commercial agri-business is implementing an outgrower scheme. Is there any examples of how effectively outgrower schemes work in Asia and Africa?
Yes, there are. Yeah, I think there's some industries already, some crops already suited to cooperatives, and one that springs to mind is vanilla, which is really a rapidly growing crop in many countries in the Pacific, and because most vanilla producers are really quite small scale, it's less than a hectare, but as an industry, vanilla really only needs 30 or 40 producers to produce a very viable export industry. So that's sort of like one industry, but it applies to a lot of commodities, right?
Sorry, George, please.
Yeah, I mean, but in order to create these institutions or these organisations, it really requires a lot of hard work. And I think this is where governments and donor organisations can really assist to create the capacity and assist in the development of these organisations.
Another couple of questions. They're coming in thick and fast. Thank you, everyone. I guess this question here, the agribusiness is cassava a commercial business, which I think would be, from just reading that, I guess, depending on individual business. Well, that, so I don't think we need to probably get into that. I think it really depends on the scale and what you're doing with it. Another one here, outgrow schemes work very well in PNG in the palm oil industry, an area that I know George and Tony have extensive experience in. We can make connections for further information, absolutely.
Yes.
George, any comment on that?
Okay, so the first question was about cassava, was it?
Yeah, the agribusiness is a cassava commercial business. I guess is it a question?
Well, it is commercial business, and it is an agricultural business, and it's really significant in Africa. So Africa really is the heart of cassava, the cassava production, and over there, most cassava is produced for domestic consumption. It's sort of like the basic food stuff that people eat. But in Thailand, for example, cassava production is very significant as well, and most of that is used for cassava chip, for the production of starch and other commodities. And I know in Thailand, they have a very significant cooperative smallholder type industry structure. So what was the second question?
It was around,
the other thing is that there's huge growth in cassava here in Indonesia, actually. There's some significant cassava development investments, and we're involved in a couple of them, I think. You're involved in a cassava project, aren't you, Tony?
We're about to be, not yet.
Yeah. And we've had this long-term involvement in a very large-scale proposed ethanol development project that is about 50,000 hectares of cassava.
Now there was this other one based on PNG, and I think someone in PNG wants to connect with you for further information. So whoever that is, please, we will make that connection happen. We know, actually I do know who that is, and I will follow up on that. Thank you. And we do have another question here, George and Tony. How about contract farming to achieve scale? What has been the experience in Asia?
What do you think, Tony?
It hasn't really taken off because there's so many smallholders involved here. It's only ever been successful at a small scale.
Yeah. What do you mean by contract farming, Graham?
I'm sorry, I can't answer that question. I don't.
It's okay. Is that leasing, land leasing?
Could be. It's a new term for me, to be honest.
Okay.
Where you've got the plasma schemes, where the company provides funding and then they purchase back the material, and that's worked in palm oil, not so much in the other.
Yeah. So here in Indonesia, sort of palm oil and large industrial crop plantations have a requirement to allocate a percentage of their production to smallholders. So they develop their own, usually it's 5%, isn't it, Tony? Yeah, 10% of palm oil plantation has to be developed for local communities who then manage it as their own. Well, quite often the companies manage it on their behalf. It's true, yeah. They also have outgrow schemes as well, as Tony says. Oh, I see, yeah. Yeah, that's very common here, actually.
Okay, we have a few minutes before, I guess, the end of this particular session. And depending on how everyone feels, we might carry on, and then if we finish early, we've got a lot more questions loading up. So thank you, everyone. We'll certainly try to get through them. But we'll just do a couple more, if that's okay, and then we'll get on to the other half of the presentation and we can cover off the balance at the end. The question, George and Tony, might there be investors that would be interested in investing in setting up an outgrower scheme as suggested, for example, vanilla, in collaboration with a national institution / CSO and an existing smallhold vanilla business to assist in growing that particular industry for the country?
Yeah, I think it's a terrific idea, especially for vanilla, right? And having outgrowers, because an industry like that has a crop side to it, which is the production of the green bean. But then it requires processing at a central site. So that's an area where government can be involved in terms of providing finance to establish that processing facility, and then allowing the company the cooperative to take over the asset and manage it in the long term. There's another point I wanted to make. And if the government doesn't do that, then there's a possibility of investment finance coming in to pay for that processing facility.
I just got some very helpful people here trying to educate us on some of the terms. Contract farming worker farmer has a guaranteed price, and also.
Oh, okay. Yeah, that's basically, and then they receive payment in advance. It allows them to plant the crop. That's a very common mechanism here. You know, as I suggested, in terms of contract farming, the majority of that type of system is set up through fertiliser suppliers. The role of government is quite interesting, especially where there's a requirement, you know, for things like procuring and generating the right genetics and research and development, and the role of they call now farm experts who go around and advise smallholders on how best to manage their crops.
Maybe you just let me turn on my mic. I'll just give a brief example.
Okay. Tony wants to share an example with you. Hang on, how do I turn my volume off mute?
Okay, this is an example of a plan that we're trying to get going in West Kalimantan of Indonesia right now. This is a large-scale forestry plantation that is obliged to start up partnership schemes with the local population. There's a large number of people within a large population of local people within the concession that have to be involved in the overall development of the project. So what has happened there is we've gone through the whole concession under the FPIC protocols, pre and prior formed consent, to obtain a full understanding of what the local communities want and need, both now and into the future. At the same time, we've socialised what the overall project is all about. Now, the commitment there is that an equivalent of 20% of the forest area will be developed into agriculture, and we're proposing a combination of avocado, corn, and some other crops, primarily ginger. Now, the system that we're looking to propose with the local people, and they seem to be accepting, is similar to the contract scheme of what you've just mentioned. What will happen is the locals, communities, together with technical support and advice by experts in each of the individual crops, will develop the areas for agriculture. The overall SPV will then purchase at a fixed rate back from those farmers into the processing plant, so that the company takes the risk through price volatility. If the prices are really good, then the company wins. If the prices are poor, then the company takes a hit. But to the actual communities, they have a guaranteed price that they can therefore bank on, and they know what they're going to get dependent on the productivity from their sites. Now, to be ensured that this is successful, that's why we're proposing that the agricultural experts come in as part of the overall management team, and they have the opportunity to share in any benefits through the profits from the processing. So this is a contract scheme, I think, as I understand from what you've been talking about, and the local community is accepting it to date. The government is very enthusiastic about it. We're getting a lot of support from them, and we're just working through getting the initial 50 hectares as a demonstration area set up now, the financing through the bank, the local bank, specifically for this project.
What's the long-term target for the area?
We're going to develop 15,000 hectares into agriculture and a further 5,000 hectares into agroforestry or forestry type crops.
Yeah, so that's quite a large project that Tony's working on. And that actually is a partnership arrangement between a corporate entity and numerous smallholders. Hang on.
Okay, great. Now, I guess the presentation this morning about the trends, and it's such a great thing to see that sustainability is becoming one of the big drivers from a social and also from an environmental perspective. So I thought it was really great how we got to learn a little bit about the emphasis that funds are putting into these things. My experience in investment, that certainly wasn't the first thing we looked at, but it's a great development. I certainly appreciate the insights to that. George, the next part of the webinar, please.
Okay. Tony's asked, before we go on to the next part, he wants to respond to a couple of the comments.
Sure, please.
Okay.
Yeah, just very quickly, just going back to the outgrower schemes, there's a comment in the chat that they've been generally unsuccessful, and that is true. A lot of cooperatives have failed all around the world. Where we see successful cases of cooperatives actually working, it's under two scenarios. Firstly is the one that I alluded to before, where there's intensive technical and financial support from the company, and the company is really helping to manage actively into those cases, or where the actual crop becomes ingrained into the culture of the local people and they have a culture for working and producing quite hard, likes of in Java in Indonesia. The Javanese people, they're real agricultural people, and they work and understand what they're trying to grow, so they are successful. Anywhere it's not really part of the culture, you're trying to introduce something new, then it really struggles. Now, the second point, there was a question about would investors look at mobile processing plants for value added? Yes, they will, but really on a case-by-case basis. It depends on the crop and the specific setup of your site. If it's a crop that needs to get to the processing very quickly because it'll downgrade fast and the logistics of the area, roads and access are quite difficult, then they will look at it. But they also take into account is how complex is this equipment, what's required for maintenance and looking after it, and whether it's suitable for the specific site. So it's really a case-by-case basis.
Great, thanks, yes. Thanks, Tony. Look, we do have some more questions. It's really great to see everyone chiming in here. But why don't we get through the next, just given time, everyone's a bit of time poor, why don't we get through the next stage, and we'll, like I said, we can't open them during the webinar, we'll certainly address them offline, or even we could cover some of them tomorrow. So George, I might participate in this one a little bit, having been an investor. I certainly have some insights I'll chip in along the way. So George, I'll hand it over to you.
Yeah, so one of the key requirements in attracting investment is to have professional business portfolios or business documents. And it's a skill that requires professionals, professional input. And it's really essential if you really want to attract especially finance either from domestic banks or international finance, that you've got suitable business documents. And the core document on any business is the business plan or business proposal, the key document, because that's the initial document that any investor will evaluate. And they're fairly standard documents, to be honest. You know, they sort of have a description of the business in terms of its details, its registration, its address, the organisation chart, sort of risk management, legal considerations, etc. The agricultural and forestry businesses, though, the business plans will need to have a really substantial technical component describing how the business is going to be operated. And as we sort of indicated previously, it's going to need to address issues of sustainability, especially for international-based finance. Right. And then there are the issues of the market in terms of market research, the target markets, SWOT analysis, etc. The vision for the future, and the goals and objectives and action plans, and the financial analysis. So, as I said, the agricultural and forestry businesses have specific technical aspects that have to be adequately incorporated within the business proposal. So that's what makes it different, I suppose. And each business sector has their own specific technical information that needs to be incorporated. So in addition to the business plan, there's this issue of providing supporting technical documentation. And these are basically the technical data on which the business plan was prepared. And these will include things like proof of land ownership, proof of legal rights, you know, quite detailed breakdowns of costs and budgets, description of R&D, IT, technical support, the operations, the environmental and social programs, and the description of monitoring, verification, and reporting processes to establish that you're meeting your regulatory and voluntary compliance requirements. Now, actually, these supporting technical documents are used to develop the business plan, but they're also pretty much exactly the same documents that are needed for due diligence. And in many cases, in addition to the business plan, there's a requirement for some form of due diligence or feasibility assessment report. And these are documents prepared by third parties that independently verify the business plans prepared by the business proponent. Now, sometimes, you know, often the due diligence is commissioned by the investors themselves, but increasingly due diligence and feasibility assessments are commissioned by the business proponents instead. And in that way, it's sort of like you know, creating additional reasons for people to invest and additional clarification of the business itself. So an investment due diligence report is an investigation or audit or review to confirm the facts and details of the investment under consideration. So in the financial world, due diligence really is about an examination of financial records. In the agricultural sector, due diligence will include detailed investigation of the feasibility of the cropping operations and the proposed production and sale of produce. So we have a presentation of due diligence separately, and I think it's scheduled for as the next presentation. Now, the fourth sort of types or sets of documents we call pitch documents or investor decks. So a pitch document or investor deck is a presentation that helps potential investors learn about your business. And generally, they're the first document that lands on the table of a potential investor. And
Yeah,
the
I might
primary
just,
goal,
George, if you don't mind, I might just chime in there for a second.
Yep.
I guess this is all about getting engagement and getting the attention of investors. And I guess from my own personal experience over the last decade, I could even go one before a pitch deck, and that is an information document, 3 pages. So often I'll get people coming to see me with business ideas. They had a 50-page business plan wanting me to read that to decide whether I wanted to show interest in an investment. I'll tell them to go away to come back with 3 pages. That first initial 3-page will basically get the interest where they want to see you pitch, provide a pitch deck. Now, to give everyone a bit of an idea what a pitch deck means to an investor, they'll usually take about 4 minutes. It'll take 4 minutes of their time to read a pitch deck. If it's any longer than that, there's a good chance that they're going to discard it. So you've really got to make sure that the pitch deck is very clear, concise, average between 15 to 19 or 20 pages. And if it's any smaller than a 20 font, then you're putting too much information in there. This isn't to share everything. This is to get them to the next stage where they actually want to read your 50-page business plan. So I just wanted to put that in there from something that I've had a lot of experience with in the past.
yeah, that's right. The primary goal of a pitch deck is not to secure funding. The primary goal of the pitch deck is to make the next meeting, right? And I think it's a key issue. And it's putting across the concept of the business, sharing the vision of the business proponents, ensuring that you're aligning your business description with the special interests and requirements of the potential investors, and engaging with them and securing the next meeting to discuss the business investment opportunity in more detail.
Investors aren't just interested in the crops or the numbers. They actually, and part of the reason to get the pitch deck right and to pitch it to the investors correctly is they're very interested in the founders and the management. That's a core part of where they're putting their money. Knowing the people are capable, knowing the people have the skills, the expertise, and I think the passion that they have is something that will drive an investor make a good decision based on those attributes as well as the fundamentals of the business as well.
Yeah, it's a marketing exercise, but it's you've got to come across as sincere, and you've got to pitch it at a realistic level. But I think the other problem is, especially like you find with New Zealanders or Pacific Islanders, they tend to undersell their business. They try to be modest, and so there's an element of putting the best light on, putting the investment in the best light. So so the pitch is the hook, if you like. Like you're hooking the investor, and then there's the landing of the investment, and it's a complex and often long-winded process. But generally, like if you're going through just a standard business process, the first thing you're going to do is sign a confidentiality or non-disclosure agreement prior to the release of commercial documents. So, people, they put a lot of time and effort and money into preparing business plans, and, their ideas are worth a lot of money. And you want to make sure that at least, where as much as possible, that you're giving your business ideas to someone, and you don't want them to take that idea and develop it themselves. So these confidentiality agreement, non-disclosure agreements are very important. And, you might think that a handshake is good enough, and in many cases it is, but if you're being a professional businessman, you're also covering yourself with appropriate confidentiality agreements. So once you have those in place, you can share the business documents, you can share supporting technical information. If you have them, you can provide the due diligence, feasibility assessment reports, and other documents. And then after reviewing these documents and the investor is interested in progressing, then you can, in many cases, prepare term sheets where the basic terms of the business relationship are agreed and outlined and agreed on. Things like the general principles of investment, the shareholding, the governance of the investment, and benefit sharing arrangements. And when you can then agree on a term sheet, then you can then be confident to get to implement the preparation of contracts, other financial documents, shareholder agreements, company constitutional documents, etc., and then implement the financing arrangements through that. But it's quite a skill to put together term sheets. It's not something I've been involved in as an investor. But Mark, who works with us, it's virtually his full-time job is preparing term sheets as a facilitation process to bringing potential investors and project proponents together. So in summary, our observation is that there are growing numbers of specialist financial institutions investing in the agricultural sector in the developing world. And apart from some international organisations like the World Bank, the IFC, the International Finance Corporation, ADB and EU, there seems to be a dearth of these financial institutions targeting the Pacific. I think there would be a benefit if regional representatives and national governments increase the engagement they have with these sort of financial institutions to encourage greater investment in the Pacific. It would certainly benefit investment in the Pacific if there was a development of a more organised investment pipeline, preparing professionally prepared business proposals to entice further investment. And investment would be greatly facilitated if there was preparation of a higher standard of business documentation than is generally the case. I'm not saying that they're all bad, but it seems that generally speaking, they're not of the greatest quality. And in particular, there's the requirement to align the business plan and business proposal with the requirements and preferences of the individual investment institutions. And one area that we've talked about quite a lot is including in the investment documents the way you're going to manage environmental and social issues in accordance with recognised standards. Thank you.
Now, you want to move on to the next session, and look, we'll do the Q&A once you've finished that one, just to get through things as quickly as we can, so we can allow as much time for questions as possible.
Okay. Right, just one moment.
Amy, are you there? Can I, maybe while George is getting ready, I might just ask one of the questions that we've got through.
Yep, go ahead.
So there's a long question here. Access to finance is one of the main challenges faced by the small farm holders in Tonga in terms of production of quality exportable crops, and to address the issue, we are currently developing a farmers cooperative society model for aggregate production, but importantly, to establish a micro-financial scheme mechanism under existing cooperative law for the farmers to be able to access adequate finance. However, just wondering if there's any examples of an effective cooperative banking model in Asia that works well, that caters for specific needs of small farm holders to access to the finance with minimal requirements.
Yes, there is, but it's a government-pushed scheme. The government has identified 2 to 3 national banks that are pushed to provide financing to smallholders. Now, this is called the KUR scheme, Korporasi Usaha Rakyat, which basically means a people's corporation. Now, this is set up under a system where a group of farmers are formally brought together by the local government. They group together, they go to the local registration office, first at the village level, and then at what we call the kecamatan level or district level, and they register their cooperative. They then get some sort of official support through a company or through some sort of established business that acts as the technical guarantor to this type of program. They apply to the government based on their registration and the crop that they want to buy. Sorry, not to the government, to the bank, the government banks. And then the bank will lend to the professional entity that is overseeing this particular program. So it's kind of complicated in that the lending is supposedly to the local people or the local cooperatives, but it's actually managed through another body to ensure that the money is used fully within the scheme and doesn't get siphoned off into other unintended uses of that funding. But this is a government push cooperative. If it's worked through private entities, then it's struggling to get any sort of momentum still within Indonesia, at least.
I guess it's important to point out that this webinar isn't going to be solutions for all comers and all sizes. I think the micro financing, I am aware of a couple of entities that are doing it within the islands, but I guess this is more about giving options, giving solutions. So if, for example, some of those small landowners can combine their land, their output from their crops, even have a centralised processing unit, for example, all these things can include innovation. These things can all attract funds. So it's about looking perhaps in Tonga, for example, at all those landowners and what's going to be the most effective way to achieve the best cost efficiencies, processing efficiencies and logistical efficiencies by working as one, more so than working as a number of separate entities operating on their own. I guess that's, having one financer versus many is probably a lot simpler in a lot of ways. But this is, I guess, something new we're trying to bring to the Pacific. So we're certainly keen to talk to Tonga to see whether we can share more information around this model to see whether it might work for the work that's currently going on there. And with that, I will hand it over to George to talk about one of my favourite subjects, being an investor, due diligence.
Okay, and just to finish off that discussion about cooperatives, it's not only producer cooperatives that are valuable. In some cases, it's valuable for buyer cooperatives, so that there's a consolidated market for produce and an organised market for produce. Okay, so project due diligence. This was actually prepared by Tony, but I've modified it substantially, so I think it'd be unfair for him to try and present it. But he's willing and able to intercede throughout this presentation. So due diligence, as we described previously, is the independent evaluation of the business or a business plan, and it's for most large investments, it's a prerequisite. You won't be able to get investment funding without an independent due diligence report. There's no one way to conduct due diligence, but a common approach includes, we discussed previously about preparation of supporting technical information from which the business plan and due diligence processes are conducted. Second, there's an intermediary step where we conduct an initial rapid site assessment, commonly called a go, no-go assessment. following which a full due diligence can be conducted. So, there's quite an exhaustive list of technical information that's required for a typical agricultural project, especially if it's a bigger agricultural project, including sort of maps and other spatial information, stocked area records, operational records, crop inventory, crop yield information, information about how the crop is established and maintained, harvesting and transport, marketing information, and direct overheads. Similarly, for the environmental and social checklist, where this information is required, it's information about the protection and enhancement of the natural environment and the impact of the project on the environment, social impacts and social programs that are implemented, and legal compliance. And there's some issues with legal compliance could equally go over to the land and crop checklist. You'll notice during this presentation that the social and environmental data requirements align very closely to the technical requirements in the UN Sustainable Development Goals and the International Finance Corporation Performance Standards. And there are other standards out there that we're going to discuss tomorrow, which are sort of in terms of detail. So we have our own land and crop assessment checklists, and I'm happy to share those with Pacific Trade and Vet for the benefit of the organised participants here. So our checklists include all the items that will likely need to be assessed. And then for each of those items, we have quite a detailed breakdown of the information that you should be looking at, right? And it's the same with social and environmental issues. Each social issue is broken down into a component, and there are sort of criteria and indicators associated with those social issues. Now, that's Tony there on the motorbike. Now, we strongly recommend, in many cases, an intermediary due diligence process that we call go, no-go analysis. So a lot of money and time can be saved if at an early stage of a project assessment, someone undertakes what we call a no-go, no pre-feasibility assessment. And this is designed as a high-level study to determine whether a specific project or projects meet key feasibility criteria. And then, and as is sometimes the case, there are immediate, it becomes immediately obvious that there are significant problems with the project that don't make it that it's not warranted to do further investigations, right? But if you do go forward, the information obtained at this initial stage can feed into the full due diligence if the project passes the go, no-go test. Now, the reason we do this is because due diligence is a very time-consuming and expensive process. And we find that if a client is paid several $100,000 or whatever to do a major due diligence, and we immediately report back that it's technically not feasible, then they ask some pretty big questions. However, if we go through an initial stage of a day or a week to at least filter out any seriously defunct projects, that really saves our clients a lot of time and a lot of money. Now, probably more than the due diligence itself, the no-go, no assessment really needs to be undertaken by experienced professionals. The sort of person who can go out and have a look at a relatively large project and know from their expertise and experience when things are going well and when they're not going well. Now, it isn't from the from the Pacific point of view, because it's such an isolated place, it's the sort of function that could be conducted by national professionals who can work at a high, to identify high potential projects that are suitable for more in-depth assessment going forward. Now, the outcome of a no-go assessment is a recommendation to either terminate the assessment or continue on to a full due diligence. And common reasons why projects are cut at the no-go stage include no clear rights to the access to land and land use or exclusive offtake agreements, because finance organisations will not invest in a company unless they can establish that there is a real ownership rights over the means of production. A second likely cause is that the site is completely unsuitable for the nominated crop. Right? So it could be the soils, poor soils. It could be could be an inappropriate climate, either too wet or too dry. The soils could be poor, or drainage could be inappropriate. Could be very steep terrain. There's a whole host of reasons why sites are not suitable for a crop. Another issue is poor logistics. A fourth one, which is increasingly important, are the presence or absence of high conservation values, such as high quality natural forests. Now, in that case, it could be that locally people are quite happy to convert that land use, but certainly most investors wouldn't be happy to involve in that sort of project. Another issue that comes up often is competing land claims and active land use by local communities in the proposed crop management area. And lastly is the lack of any qualified or willing labour force to support the business. So, and that's really relevant in the Pacific, where quite often these islands have got very low populations. So if you're putting in place a very intensive agricultural program and there's not enough labour to process the crop, then that's a significant barrier to investment, or to the success of the business. Okay. So when we're doing due diligence, we're sort of looking at 5 key aspects. One is the legal aspect. Second is the site aspects, then operational, environmental, social and community aspects. The go, no-go will be looking at key elements within each of these aspects, and the full due diligence will be looking at it in its entirety and in detail. So each of these aspects, we have a long checklist that we generally go through, but of particular interest, things like, depending on the jurisdiction, the country or location, we really need to establish that there's an appropriate legal entity has been established in which the investor can invest, that the proponent has legal rights to own or use the land and assets on the land, that they have all the required land use permits and licenses and supplier offtake agreements, and those sort of things, and that there are appropriate community agreements, if they are required, in place. So one of the things that we would evaluate routinely are a whole host of site characteristics, which together determine whether or not the place is suitable for the crop and the business that's being proposed. So the first issue that we're looking at is the existing land cover. Now that's important in several ways. So The existing land cover may have existing commodities production capacity, which the investment will enhance through improved management, or the investment might replace it with alternative land uses, or it could be just left alone. So that has to be documented and understood. And the existing land cover has a significant impact on future land management and land use change opportunities. So obviously, if there's no forest cover, then you need to really investigate what type of non-forest cover is there, whether it's scrubland or ex-farmland or under intensive agriculture. So generally speaking, if it's ex-farmland or scrubland, they're the easiest to convert to new projects, as the land's not under active intensive use. And what we find here in Indonesia and many parts of Asia is that if something is ex-farmland, they may have tenurial issues, meaning that the previous farmers of that land have some claim to the land. Whereas if it's scrubland, it's generally being burnt down forest or logged forest that is just sort of slowly regenerating. And if the land is currently being used in intensive agriculture by local communities, it's going to require a significant community engagement and a negotiated settlement if you want to implement a land use change on those areas. Now, if it's under natural forest, then that's that's an aspect that really needs to be considered in some depth. So the first issue is whether in your jurisdiction it's really legal to clear natural forest. And will the clearance of that forest conflict with the community values for non-forest timber product use and conservation? Will land clearance be acceptable to investors and other stakeholders? And generally, if it's an international investor, they will not want to be involved in forest land clearing. And there's substantial cost involved in clearing forests, but there's also opportunities to generate revenue through the sale of the wood products.
George, we might just, it might be good just to give an example of this and the importance of it, because I know that in Indonesia, with palm oil in particular, there are a lot of customers out there that the agricultural providers were clearing the forests, and basically the suppliers, given the international pressure on them from environmental groups or even their own governments, a lot of contracts or supply contracts, I believe, were cancelled because of those natural or native forests being cleared for crops. Is that your experience? Has that been quite a common view that you've seen?
Yeah, so there is a huge spotlight now on the palm oil sector because of its extensive history of land clearing and conversion of forest areas to palm plantations. Yeah, so the situation in Indonesia right now is the government has put a moratorium on any further land clearance. For forest clearance, yeah. Yeah. And there's sort of quite detailed prescriptions around that, definitions around what comprises natural forest and what needs to be protected. If you have a look at that image there, you'll see that in the middle there, it's what I'd call, I think that's corn, isn't it, Tony? That's a corn crop, right? Now in the foreground, you have these, I'd call that abandoned agricultural area, wouldn't you? Right? And then in the background, there's natural forest. So I know this company, and their intent is to target that foreground area first as a priority, as sort of scrub, maybe. Perhaps negotiate with the agricultural people here to plant up that sort of corn type area, but involving a compensation agreement. And it's unlikely that they'll ever be able to convert that sort of high forest, particularly that stuff in the background.
Yeah, this photo I put in specifically because it's an example of what, where I turned down or said a project was a no-go. This particular company, as George said, they were looking to convert what they thought was mostly scrub land and ex-farm land for a combination of renewable energy and agricultural crops. When I got over there, I found out that more than 50% of the area they were looking to develop was not scrub land. It was secondary forest that had HCV values attached to it. So given the current environmental regulations, both within Indonesia and from the potential buyers, I recommended to the company not to go ahead with this project.
Yeah. Good. Okay, and so I think you've got yours. Are you muted, Tony? Okay. So generally speaking, when we're doing a due diligence of an asset, we'll do a land cover mapping exercise. Now, that land cover map will almost not be in place. So we'll have to create that using a variety of remote sensing images. So that could be like a drone survey, or it could be a aerial photography survey, or most commonly, we're using high resolution satellite imagery. So you can see this is a block. It's been, we've put the legal boundaries onto the block. And then from there, we've done a remote sensing analysis with these guys over here. They're our GIS team. And from there, we were able to determine what's natural forest, what's plantation, what's scrub, and what's bare land. These are general categories for land cover assessment. Now, a second key attribute in relation to site aspects is topography. Topography has a really significant influence on agriculture and forestry crops, but especially agriculture. So generally speaking, you want agriculture to be conducted on flat land where possible, especially because it's amenable to mechanisation. Another aspect they would probably look at is whether or not, because it's flat land, there's a possibility that it's poorly drained, or it could be some sort of swamp, which then negates the ability to grow a lot of crops and involves high costs, and mechanisation becomes a bit unfeasible. So generally speaking, we can mechanise agricultural crops up to 15% slope. Up to slopes of 30%, we can plant tree crops. But over 30%, harvesting of tree crops becomes problematic. Not problematic, it's possible, but it becomes more difficult. And generally speaking, there are legal restrictions on developing land, steep land, which is sort of approximately 40% slope. And it's one of the key determinants on the suitability of a agricultural project. So many countries have got quite detailed topographical maps, but in the absence of that, you can generate this information from satellite imagery. And here's an example here. This was that same project area we were looking at previously, where you can see the green areas are the flat areas by the river. You can see these orange and red areas are very steep areas. So you can, through your due diligence, you can pretty well identify areas of land suitable for different types of crop development. You still have to go on the ground and eyeball it yourself, because these images are not completely, it's not that they're not accurate, they can be misleading. So you've got to go in on the field and check them. The third important aspect for agriculture and forestry is the soils and the suitability of the soils for the crop. And there's a standardized category system for soils, which go from S to N, where S is suitable and N is not suitable. But those suitability criteria really depends on the crop that you're looking at, right? So some crops will grow in certain conditions and some won't. And the final factor around site factors is the climate and the altitude. And they're related to rainfall, to temperature and temperature variation, to the presence and frequency of storms, which is very important in the Pacific, and to altitude, because that impacts on both the rainfall and also on the average temperatures. Now, when you have all these factors considered, you can create what's called a site crop suitability map, which yeah, I've got a few examples of those here. So this is an area in central, no, it's in Western Sumatra, up in Aceh, where we prepared a whole lot of site maps, site characteristic maps, and then we use those to determine the suitability of different areas within the districts for different agricultural crops, or different crops. So for example, these are the areas suitable for growing vegetables. Same site things are used to identify areas that are suitable for growing coffee. And lastly, this is the areas that are suitable for growing pines. So if we're evaluating a project, we can use these sort of technologies to identify what areas are suitable for what crops and whether the project proponent is proposing development of a crop in an area that's not suited. A large part of due diligence is really about identifying and documenting the crop management practices that will be implemented. So it's about what methods are going to be used to prepare the site, plant the crop, maintain and harvest the crop. Is it going to be a mechanized process or a manual process? What are the costs of each stage of crop management? What's the expected crop performance and yields, and what returns are likely to be gained from those crops? What workforce is required, and are they available for the project? And what level of expertise and competence is present in the proposed management team and in the workforce? So all those are critical factors that surround the crop management. Another issue is around infrastructure and access. So you can grow the world's greatest crops, but if you can't drive to that area and load it on a truck and take it back out, then that crop is basically worthless. So you see here a nice photo of a really terrible road. And those are the sort of things that we're trying to investigate, and where there are absence of roads, we want to have evidence that they're going to invest sufficient, where they're going to put investment into the development of suitable infrastructure.
And longer bridges can kill a small project because they're just too expensive.
Yeah, and it may not be apparent, but bridges and river crossings and those sort of things, they're critical to project success. If this is a export business or proposal, then we really need to understand the logistics around the port facilities that are available to export. Now, I worked in Niue, and I know at the time they really didn't have a suitable deep water port facility, and it was only really suitable for containerized stock. So you know, so that creates a real limitation on the type of crop that you can buy and that you can produce, and the quantity of materials that you can produce. Right? So you really need to understand things like, you know, where is the nearest port? What are the travel times to get there? What is the draft or the depth of the port and what type of vehicles can service that port. And issues around, is it a direct supply chain or is there a lot of double handling? Because as Tony notes here, that if you've got a commodity crop which is relatively low value, any additional cost can really really destroy the profitability of a project. Third aspect is environmental issues, and that's looking at the existence of environmental permits, plans, and compliance with those documents, and compliance with the documents or the plans. Also, whether the organisation has voluntary environmental commitments and whether they've met those commitments. Whether the area contains, whether the crop management area, proposed crop management area has high conservation areas within it, and whether or not those high conservation values are protected, and what processes and systems they have in place to manage and mitigate environmental impact. Similarly, with communities, are there existence of community agreements and compliant, and is the company in compliance with that agreement? And similarly, are there voluntary social commitments that the company is entered into? How is it mitigating the impacts of the project operations on local communities? How is the organisation managing grievances and claims made by local communities? And is the local workforce available, capable and willing to work on the project? So these are all sorts of aspects that we look at. So in summary, a due diligence report, which is often called a feasibility assessment, is an independent assessment of the business project or business plan, and is often a prerequisite for investment finance. Preparation of technical data is a key task, and that's used both for the preparation of the business plan itself as well as the due diligence documents. And I just note that we have a set of SOPs for agriculture and forestry due diligence, which we're happy to share because they're just standard documents we send out to all our clients. There's real value in undertaking a pre-feasibility or a go, no-go assessment as a useful step to filter out obviously poor projects, and potentially a process that can be conducted by local experts in some cases. And we just note that a full due diligence is a very comprehensive process that incorporates evaluation of legal, site, operational, environmental, social and community aspects of the project. It's independent, and it's often used as a bankable document to support the claims of the project proponents. I think that's it.
Right, George. Thank you very much. I think we've got a lot to absorb with all that, and just apologies up front for anyone who's been sitting there trying to take notes. We will send out presentations for people to have this information firsthand. George, that's okay with you, of course?
Yeah, and if you could wait until the end of no, I can send today's presentation out to you.
We'll send it
because there has been some sort of minor modifications, and you can share those, and then tomorrow's presentation will be available when we finish.
Yeah, we'll send them all out after the webinar series is finished up for tomorrow. Okay. But look, I think there's some really key things for everyone to take away from, I guess, that segment of the webinar. And, you know, having been an investor for many years, the documents are essential. They can be, you know, a reason for failure with one document being off kilter. You've got to imagine that these investors, these funds are getting lots of proposals put in front of them. You're not the only one they're looking at. So you've got to comply with their, I guess, their process and the things that they want to see. And due diligence, you've got to be documents aligned, everything, you meet all the criteria. due diligences should be just a process you go through. It's a long process, it's a long-winded process, but it is the process that you have to undertake to get finance into your projects. I think also, look, I guess there are all types of different project sizes. There are people who are going to be looking to export. There are going to be people who are looking to provide agricultural for their own communities, for their own sustenance. I think what we're looking at here is more about mid to larger scale, and not ones that are existing today, but the ability to put them together to create a larger output. And this is really targeted at entities that want to export. It's all about getting the most out of every acre of land you have, making sure that you can have the best quality product come out of the land, and making sure that you utilize that land to get the most product out of that land that's possible. So I think tomorrow we're going to be diving a little bit into a bit more detail around that. So we're happy now to take some questions, but just something I'll touch on now, and I will go into more detail at the end of tomorrow's session, because this is a really important part of this webinar. Because I've been to a few webinars as a participant. I have to say, like George, this is my first webinar as a host. But we want to make sure that we're sharing information, but with context, and we want to have follow-up. So what we're proposing, after we finish this webinar series tomorrow afternoon, in a couple of months or maybe 6 to 8 weeks time after this, we want to have a follow-up session. So give everyone the information that we're sharing with you now, to allow yourself to go out there, to have the discussions with companies, with your local landowners, with the government, with anyone that can be a part of putting, I guess, a project together. And what I would ask is everyone, what we'll be doing is talking about those projects. If people come back to us at that follow-up session, we'll be working through those projects to really critique and to give some guidance to make sure that you've got the best chance of success of obtaining financing for your project. But look, I guess we have finished a little bit early. It's still a long session, but if there are any more questions, we can take a few, or we can finish off today. And please, everyone, tomorrow is a really important part of this 2-day session. We have to make sure it's important to make sure you come back for the second webinar. So we can take a couple of questions, but what we might do is wrap up not long after, and then we'll come back tomorrow and get stuck into the second part of this webinar series, providing you all with more information to allow you a better chance of attracting the foreign direct investment that the Pacific Islands needs to grow the agricultural sector. So if there's no questions, I can't see any coming through. I've got a couple in reserve just in case.
Well, what I suggest is by the end of today, we can prepare a list of questions, and we can respond to them at the beginning of tomorrow.
Yeah, look, if we've got any, I think we've got some people thanking us, so maybe everyone's had enough today. And I'm sorry for those who have got bad perception. Unfortunately, we can't help there, but hopefully tomorrow will be better. And even if you know, certainly we can minimise that by taking off the camera off myself in particular. Okay, so I've got another one here. We'd love to get access to the presentation. Yep, absolutely. Look, at Pacific Trade Invest New Zealand, look, we've got everyone's details. We've got our details. If you need to connect with us in regards to getting the expertise that George and Tony bring, look, we're happy to connect and help in any way we can. So that's not an issue at all. You know, this isn't just an information sharing session. We want people to succeed, and we will do all we can to help facilitate that. And certainly, I've got some expertise that I'm happy to help people with as well in regards to having a look at their documents and the like too.
Okay. Well, thank you everyone for participating today, and I look forward to continuing this tomorrow.